Okay, good morning, everybody. Good afternoon, good evening, depending on where you are logging in. As a very, very quick introduction, my name is James Green. I'm the investment director at deVere. As I say, thank you for logging in. Got a fantastic webinar for you lined up today. The agenda will be as follows. I'm going to do a very quick, I promise, a quick 60-second introduction to deVere. There will be people on here, or there may be people on here that haven't heard of us before. And then Matt, I'm going to hand over to you and you can tell us all the exciting developments in the UK. Excuse the pun, do you like what I did there? The exciting developments in the UK property market. If you are a deVere client, you're probably on this Zoom because you've dealt with one of our wealth management, one of our advisory companies. Overall, deVere has 50 different global entities. 33 of those global entities are wealth management. So you're probably a client of one of our wealth management entities. Maybe you deal with our product consultancy business and you have money invested in DVAM funds. Maybe you deal with our global investment bank, maybe foreign exchange. Maybe you're a PLL client, or you use our investment app or our digital banking or our pension trustee. If you don't know who we are, you now know that we do all of those things. One of the areas of our business, one of the divisions is UK property. So we have a very, very small panel of developers. And one of those is Matt. So I'm I'm excited to introduce Matt to you. Matt runs Intercounty Homes. The reason why we use Matt, and I don't mind saying this to your face, Matt has a very, very high success rate when it comes to UK property. He's cautious, so you'll notice that as he's talking. I like that. And he offers an end-to-end service. So that's another reason why I like Matt and I like Intercounty Homes. We've dealt with Matt for about 12 months now. And the majority of people, Matt, just so you know, are probably outside of the UK. So 99% of people in this Zoom, I would guess, are outside of the UK. And they want a hands-off approach. They want an end-to-end service. They don't want to be dealing with stacks and stacks and stacks of admin and different points of contact when it comes to UK property purchase. So Matt, I'll let you introduce yourself if I haven't stolen your thunder there.
Absolutely not, James. No, absolutely not. Well, firstly, thanks for everyone for attending today. My name is Matt Reed from Intercounty Homes. So just a little bit about Intercounty Homes and myself. I've personally been involved in property for the past 23 years now, predominantly investment property. And at Intercounty Homes, we source new build investment opportunities for investors, UK investors, overseas investors. We work with James now for just under 12 months, and we primarily look for properties which are suitable for investment for investors. So what we typically look for are, what locations are emerging locations. Where are we going to see good capital appreciation? So there needs to be a story there. What's happening, a story of regeneration, new businesses moving in. We do a full investment pack for each location, but we look at a lot of properties. We do a lot of due diligence on each site that we look at, and 9 times out of 10 the developments we look at just aren't suitable for investment purposes. So that 23 years of experience really comes into play from investing in property, myself and some of the rest of the team. And we use that knowledge to find suitable products. So typically, emerging locations, we look for areas where there's high rental demand. Obviously, you want the properties to be tenanted. Obviously, the high rental demand also pushes up the rental yields as well for investors, which is great. Areas of high capital appreciation. Why are we investing in property? We're not just investing in bricks and mortar for the aesthetics. We want the return, right, on the money that we're investing into the property. So that's really important. So we make sure that there's room for sort of significant growth in the locations that we take on. We work with trusted proven developers. We've got some serial developers that we've worked with time and time again. Excellent build quality. Delivering sites on time. Dealing with any sort of snagging issues, if there's any snagging issues at the end of new builds, which you always get. And some of those developers we've worked with for the past 15 years. So which is really nice, because it gives us that confidence that we can offer property to investors that is going to be a really, really good product, aside from just it being in a good location.
Interesting, you said there that 9 out of 10 projects you turn down, and I guess that backs up my point about why we only have a very, very small panel of developers. Matt, before you talk about places in the UK that you think will do well, can I ask you a question about the UK in general?
Yeah,
and bear
sure.
in mind, there's lots of people on this call who have left the UK, and all we keep reading about is millionaires are leaving the UK. Why is the UK in general a good place to invest, do you think?
Well, before I answer that question, can I just sort of ask you a question, sort of bat it back the other way? So if I had to say to you, over the past 50 years, what would you say is the average capital appreciation on UK property?
You've chosen to answer a question with a question. 50
Absolutely.
years or 15? 50.
50, yeah, 50 years.
I am going to go 200%. I'll go 4% a year.
4% a year. Would you like to guess again?
Higher or lower?
Higher.
300 max.
Okay, I'll stop you there then. So over the past 50 years, according to the house price index, house price growth has been 2,534% over the past 50 years.
I'm going back on mute.
Okay. So there's a very interesting fact for you, but to answer your question, it is a very good question. There's a lot of noise around the Labour governments. We've seen all the tax hikes come in. It was a very, very big blow to a lot of people. They got it all out there at once. I think that's what I feel they've done. And I personally, I think there'll be a few other changes happening as well. But if you kind of move away from the noise, and actually look at the facts in property, and you look at the UK as a whole for investing in property, it has an excellent track record. It really does. We spoke about the increase of 2,534% over the 50 years there. But that aside, there's lots and lots of reasons to invest in the UK. Particularly compared to investing in property in other locations. If you want to invest in property, the UK has a very, very good track record for capital appreciation. It's historic. There's massive housing shortage in the UK. Huge housing shortage, which obviously within the new government, the Labour government, within the budget, they've said that they want to build more houses. And I can tell you, James, and this, I've been heavily involved in development myself, and planning, and it's an absolute nightmare. The whole planning system is completely disjointed, and that's going to take a very, very long time for the Labour government to sort out, if they ever do. So that there's a massive housing shortage, which ultimately pushes up house prices. Because there's less product available for people to purchase. It also pushes up the rental demand as well. Because there's less properties. The population in the UK is also growing. So there's lots of different factors there as to why people should still invest in the UK. And there is this noise. This noise is there, but that noise isn't the first time the noise has been there. And that's been there plenty of times over the past 50 years. I think, the what we're seeing also is the interest rates, gone are the days of being at, the happy days for buy-to-let investors at the 2% level, 2.5%, 3%. We're now looking at around sort of lowest rates of 4.99% at 75% loan to value. And again, if you historically, without being boring, but if you look at the if you look at the interest rates over the years, 4.99%, 5% is still a very, very good rate. And if you combine, those rates with the, yes, you're paying a higher capital appreciation, but if you combine those rates with the properties that we're finding offering the, very good rental returns and also the capital appreciation on the values, that extra couple of percent is a drop in the ocean, So yeah, we're seeing that more investors are getting used to those higher interest rates, and we can sort of soften that blow with the capital appreciation and higher rental yields. Again, comparing the UK to other locations, it's a transparent legal system. There's a transparent legal system in the UK compared to other countries. You've got your title that you purchase. If it's a clean and sound title, that it actually is. It's been checked by a solicitor. So yeah, so there's obviously ever tax efficient ways to own property as well. We were talking about taxation, owning properties in limited companies. A lot of investors have shifted onto that. I've seen a lot of investors, even myself, sell property to come out of that system of owning properties individually to actually purchasing in a limited company, which is something that we can also assist with as well. So, it's as far as we're concerned, I know we're selling property. It's still a very, very attractive investment, but providing that you purchase the correct property, it has to be in the right location. It has to be a good build. It's got to be high rental demand. And that's what we look for investors.
Fantastic, thank you. I stand corrected. I'm back in my back in my box. Point.
And also, can I just add to that as well? Property is property is great. Obviously, I know you guys offer all different types of investments, and it's really important. I'm sure you say this to your clients to diversify your portfolio. You need to diversify your portfolio to spread the risk. And if you are looking at buying property, then the UK is probably, or is the best place to do it.
Super. Thank you very, very much. I won't ask any other questions. Matt is going to share with us 3 developments. Is it 3? 3 developments in 3 areas that he thinks will do very, very well. So I'm going to hand it over to you again, Matt.
Absolutely. I'm just going to share my screen.
Okay.
Apologies, I'm just trying to share the screen. Okay, here we go.
We're in a world where trust and credibility is so important. You can just see on my WhatsApp on my phone. I have checked. Matt is correct. That must be your 2,500 statistic.
Okay. James, I think you'll need to let me.
Okay, mate.
Share the screen.
There you go. You should be able to now. I know you're a Teams man, but it's the green,
there we go.
Green
I
button
am. Zoom really confuses me. There you go.
Yes.
Showing my age now.
Green button at the bottom, or it's green on my screen. Share. Press that arrow. There you go. Super.
Okay. We just
can see yacht club side.
Yes. Excellent. Just bear with me. Right, so the first location we're going to talk about is Nottingham. And before I talk about the development, I'll give you a facts about Nottingham. Nottingham has been going through a major regeneration program over the past 5 years. There's actually £4 billion allocated to Nottingham, £4 billion investment, which is basically for Nottingham and Greater Nottingham areas. And just so everybody knows, we as a business, what we do is we actually write a full due diligence report on each location, which is publicly available to everyone within our sales pack. So that saves you going to have to do the due diligence yourself on the location. Obviously, we're offering you units in each development, but this document is called Why Invest, and it has clickable links to different websites, YouTube videos. It's very interactive, so you can take that away and you can go and do your own due diligence as well. So £4 billion investment in Nottingham. 23.4% increase in capital appreciation is expected over the next 5 years. We get a lot of our reports from Savills, which I'm sure that everybody's heard of. They're very, very good reports on locations for capital appreciation. There's massive rental demands. It's a growing city. It's attracting more businesses to the city, and ultimately the population is growing, which means there needs to be more property. There's not enough property, although there's quite a bit of property being built, commercial resi, and that's driving the rental yields up. So the other thing there is it's a huge student population as well. So I didn't know if you knew, James, that there's actually 2 universities in Nottingham, which again, is bringing more and more people into the location. Growing economy, ongoing regeneration, and obviously Nottingham as a location itself is very central in the UK. For anyone that doesn't know where Nottingham is, and they don't have a bad football team at the moment either, as much as I hate to say it, James. So what we've got here, this is a riverside development called the Yacht Club. It's a finished development, which is fantastic. It's built to a very high specification. There are 3 blocks, as you can see here, block A, B, and C. 81 units in total. Now, Intercounty Homes, deVere have the last 13 units exclusively, and just so everybody knows, this site has not been sold overseas. It's all gone to domestic clients. So majority owner occupiers. There's been a few investor sales in the UK here as well, but all of those other properties are now completed. So there's no, there's no other properties available at all on this development. So it's set within the city centre, but you're outside on the fringes of the city centre on the River Trent. So it's kind of that sort of home away from, you're being in the city, but you're basically have countryside around you. A lot of the apartments have river views. You can see this greenery around the development as well. So if I just take you to some more images of the site. I have actually got, within the sales pack, there's all the actual finished images of the site here. You've got the 3 blocks, block 1, 2, and 3. They're all 2-bedroom, 2 bathrooms. They're good sizes, approximately 750, 800 square foot, 2 bed, 2 baths, all included with parking as well, which is very good.
Matt, how do people get a copy of the sales pack? I suggest they go to their deVere advisor or directly to you or I. You can find me on LinkedIn, James Green, and I'm happy to send it if anyone's interested. Sorry,
Matt.
Yeah,
there's basically a Google Drive sales pack for each site, which contains the brochure, the Why Invest document for the location, photos, of the developments, floor plans, and the schedule of accommodation for each site, which contains also, you know, the purchase prices, the yields, and the yields have been given from, you know, historic rentals in the property from the agent that we're using. So every single site that we take on, we employ an agent, management agent, to give us the prices for the rentals for the investors as well, for the purchasers. So yeah, it's a cracking site, really nice scheme. And again, you know, more can be found in the sales pack. Yields on this site go up to 7.31%. There have been quite a few purchases in here from Nottingham Forest Football Club as well, and also, you know, rental demand from the club as well, because it's really not far from the Forest ground. So that's the Nottingham site. I'm going to be short and sharp with each one.
Thanks, Matt.
Are we taking any questions, James?
I think we'll do
questions. Wait to the end?
I think we'll do questions at the end, if that's okay, Matt.
Yes, yeah, absolutely. Okay, so can I stop sharing that?
Yes, I do know Nottingham. It's a great area, and I noticed you smiled when you said about the football club. Yes, they are above Chelsea, so thank you for that.
Yeah, but below Arsenal.
Yes. So if you stop sharing and then move on to the second development, and then we'll do all the questions at the end.
Absolutely. Okay.
In fact, Matt, I'm going to change that. Can you just take 2 questions for me on Nottingham? What's built around the property?
What's built around the property? Well, I can actually share a map, if that helps. Do you want me to do that?
Yeah, go on.
Or do you want to? Should we do that at the end? Should we do that at the end?
Let's come
back to that one.
You're right.
Yeah.
And then Diddy has asked if we could send brochures. So yes, absolutely. If you go to your deVere advisor, if you don't have a deVere advisor, please feel free to come to me directly on LinkedIn, James Green deVere, and I can share the details with you and put you in touch with a deVere advisor in your area. Thanks, Matt. Over to number 2.
Okay. Number 2, yeah. Okay, so the next scheme is in North Yorkshire. This is a holiday let play. So we've got available 15 units out of 28 in Scarborough. So Scarborough basically is the second most visited holiday destination, the tourist destination, should I say, in the UK outside of London, which is a good fact for you. And what we've got here is basically a conversion of 2 buildings, adjoining buildings, which is a grade 2 listed building, beautiful building. And the play on this, as I said, is holiday let. So what we've done on this one is we've basically done all the usual research. We've gone the extra mile on the rentals on this one. We've spoken to a company called SPA Properties, chap there called John Stanton that owns that business. He's a holiday let specialist in Scarborough. Really interesting story. He basically built his business from his own personal property rentals, and had such a bad experience that he thought, well, you know, I can do this better. So him and his wife basically built this business about 15 years ago. Now they manage around 280 properties in Scarborough. So so what we've got from John Stanton is rental figures for the 15 units, which are based upon each type of unit. If it's a 1 bed, 2 beds, what floor it's on, if it's got a sea view, no sea view. And he's given us the very, very accurate figures from something called big data. The big data is something that all the agents in Scarborough use, which is historic data. So it's actual real data. It's not just sort of pie in the sky figures. You know, we think you're going to get this amount. So they're very, very accurate. I'll talk about the financial side shortly, but just to give you an idea, this scheme is on the Esplanade. Now, the Esplanade is a long road that runs across the seafront at Scarborough, and so it's prime location for Scarborough. I don't want to be biased, but I've had a few comments from different agents to say this is the best, development in Scarborough, not just because of what it looks like, but also the convenience, the location, particularly for a tourist or someone that wants to live there as a owner occupier. So this is part of Scarborough Bay. This is the development. The development is nearly finished. It's almost complete. You've got these CGIs, which actually the final images, which are in the sales pack, look even better than what you can see here. So yeah, so this is available in the sales pack. We've not had this one for too long, but we've already, you guys have already sold 4 units, James, on here that you're going through, and I think we've got the first completion happening next week.
Brilliant, thanks.
So again, yeah, very, the developer that we've worked with on this one, we've worked with for the past 14 years. Very, very good developer, good product. The properties are all individual, which you'll be able to see from the sales pack. I'm going to show you the images. Not one apartment is the same. They're all very unique, which again, I can show at the end if anybody wants to see, some images of these finished sites that we're showing you. But it's a very, very good site. Net yields on this one can be anywhere from 8%. I think some of them went up to about 12-13% net yield after all costs, which is very, very good. So it's a bit of a different play. The Nottingham one was AST. This one is this is a holiday let play. So yeah, it's a bit of a different kettle of fish, this one. So
Matt,
yeah,
great questions. What's AST for anybody who doesn't know the acronym?
Sure, a short hold tenancy agreement, which would be a 6-month agreement with one tenant, and they pay, I don't know, £1,000 a month rent over 6 months with a deposit.
Okay, and then my second very, very quick question is, with something like this in Scarborough, which I think looks fantastic, does a management company deal with all of these short-term rentals? Because if the majority of people are like me,
yeah,
they don't want the hassle of having to manage an Airbnb account.
No, neither would I, to be fair. Okay. So yeah, it's a very good question. Yeah, so SPA Properties manage the whole process. So they make the property compliant for the purchaser, which takes about a week, 2 weeks to do that. We've obviously got things like furniture packs, which they handle as well, and the developer has also said that they can handle the furniture packs for the investors. But yeah, I mean you're absolutely right. You don't want a phone call at Friday evening saying I can't get into the property. And that's what SPA Properties do. So they basically find the tenants, they manage all the bookings, they give access to the holiday makers or the people staying there. They also do all the linen changes, prepping it for each individual booking. So it's completely hands off. There's no involvement needed at all from the investor. So yeah, John Stanton's very, very good at that. He's been doing that, as I said before, the past sort of 14, 15 years. So yeah, so that there won't be any sort of calls at all. The only calls you should be getting is that we've just paid you your monthly installments of your rental income. That's the call you want to get, isn't it?
Okay. I like that. While you're moving on to the next development, can I just ask one other question that's in the chat for Nottingham?
Yes.
Can the AST be on a 12-month basis? So you mentioned 6 a second ago. Can it be longer than 6 months as well?
You can, yeah. You can have a 12-month contract
Okay.
with a tenant. I mean, you can obviously, if it's a corporate let, you know, if there's a corporate body that wants to let the apartment. So just say, for example, it was someone like, you know, it was someone like the football club. You know, you can. It's quite usual to have a 12-month let with a tenant, you know, to lock them in for that, and so, sometimes even longer. So yeah, that you can do that.
All right. Super. Thank you very, very much.
Just one thing I wanted to add to Scarborough was that one thing I didn't mention was the fact that Scarborough is as a location. If you're looking at this thinking, you know, this is purely based on holiday lets, well, actually, that isn't correct because Scarborough is busy all year round. So it's busy. Yes, it is busy for holiday lets all year round. There are higher peak seasons, you know, where you get more demand, but you've also got, you know, lot of workers there as well. You know, you've got the wind farm that's Doggers Bank wind farm that's which is the, you know, the largest wind farm, I believe, I think it's the largest in the world. So that project's ongoing, massive project. So you've got, you know, if you do get quieter periods for holiday let income, you have got those periods as well for you know, contractors and people like that.
Brilliant. Thanks.
Okay. Stop sharing. Okay, next project. Okay, third and final project is in a place called Bishop Auckland. This project is called St Anne's Place. Again, it's another development which is a smaller development, which is in a conservation area in Bishop Auckland. Now, if people are sort of wondering where Bishop Auckland is, it's near, you know, Durham. You've got Durham, Darlington, Newcastle. It's in the northeast of England, which I can show you on a map shortly. So this site is a mixture of we've got 4 apartments there, and we've got 14 houses. So we've got houses on this site as well. It's in a conservation area. It's had to be built from stone cladding, which makes it even more desirable because that was part of the planning. And yeah, we've got you know, properties here starting from 90,000 for a 1-bedroom apartment. Yes, I did say 90,000, James, which is pretty incredible considering it's new build, and you know, the cost of build currently. You probably couldn't build a 1-bedroom apartment for £90,000. So obviously you've got a developer here that's bought land very well and is able to keep his build costs down. So just to give you an idea, Bishop Auckland, it's a market town. It's a market town, and it's actually been left behind over the years. You know, so places like Durham have continued to grow. Again, Darlington has continued to grow, but this is a market town, and it's having £200 million invested into it as a market town, which is pretty incredible. So there's lots of things happening there. You've got a new bus station that's going in. You've got the Kingsway Square project. The Kingsway Square project is being built on this kind of derelict piece of land which has been there for forever, and that's going to contain you know, restaurants, bars, boutique shops. There's actually a chap there from, if anyone's heard of MasterChef, if you have MasterChef where you live. So one of the contestants on MasterChef, he's actually from this area. He's opening up a new restaurant there called Geordie's Restaurant, which will be, you know, a restaurant using all local produce from Bishop Auckland and around Bishop Auckland. You have the Auckland Castle. So there's a castle within a market town centre, which has had millions and millions spent on it to bring it to life, which is a huge. Again, we're talking about tourism for Scarborough. You know, Bishop Auckland is also popular for tourism because of not only what's happening there. It's having money spent on it, but just the surrounding attractions. There's lots of attractions around Bishop Auckland. So you've got the town hall, you've got a Spanish art gallery, which was actually opened in December 2023 by now King Charles, and also the Queen of Spain. It's the only Spanish art gallery in Europe, which is just dedicated to Spanish art. Links to that are all within the Why Invest document. You've got the town hall. You've got the Auckland Tower, the viewing tower. You've got Stack. Now, I don't know if anyone's logged in the UK, but you may have heard of something called Box Park. So you've got Box Park, which is basically you've got one in Shoreditch. There's one in Brixton. You know, there's kind of like places that people come together, and you have sort of boutique shops in them, and you have street food and that sort of thing. So that Stack is underway. There's also a Stack in Newcastle. And it brings us on to the development St Anne's Place, which is basically in the conservation area, which is here. There's a lovely cricket club right behind it as well. And if you look at the proximity of the development in comparison to this city centre, and especially where this Kingsway Square project is happening, you know, it's very, very, very convenient for an owner occupier or a tenant to live. So here's a location map. You've got Bishop Auckland here. You've got Middlesbrough is here, Stockton-on-Tees. Durham is up here. Then you've got Newcastle, which is just slightly further up. That just gives you a rough idea. If anybody wants to look at the locations on these sites, the full postcode for the address is also available in the sales pack. So the apartments on this development, let me just go a bit further down. This is the show home, one of the houses. A really nice finish. So this is the site plan. So there's basically 2 blocks, 2 rows, should I say. And you come in here, this is all a private road as well. It's a private road into the development. You've got a row of houses here, and then you've got a row of houses and apartments. The darker shapes here are the apartments. So you've got 2 ground floor, 2 first floor apartments. All the houses are 2-bedroom houses. So these apartments they're yielding over 8%. The houses are coming in sort of late 5% yields, which is, you know, anywhere between 5 and 6% is very good for a house, because ultimately you pay more money for the house, but you know the rents are still good as well. So these are finished. You've got the typical apartment layouts of the apartments. There's 90,000. I think, James, I'm correct in saying there's only 2 apartments left now. I think 2 of them have already gone.
Yes, mate. Unfortunately, they are fantastic developments. Unfortunately, though, you didn't give us too many units, so we do have to be fairly snappy with these.
Yeah. So these are the floor plans for the houses, and you've got the floor plans for the apartments. Houses start at 180,000 and they go up to 195,000, which again, you know, is cheap. You know, it's really cheap. Okay, so that's the Bishop Auckland site. You know, if I have to summarize on Bishop Auckland, I would say that it's a market town that's been left behind. It is at the bottom of that curve, that trajectory, which is, you know, right at the bottom there. And you know, we feel that you know, capital appreciation in that location will really take off in the next 5 years. I think we've predicted on that one. Just double check.
There's a question in the chat while you're double checking that, Matt. Could actual photos of the development already built? Are there any actual photos? I'm guessing.
That's a really good question. Yeah, really good question. So in the sales packs, we have the images of the finished product for each site. If the site, so for example, this one is due for completion mid-Feb this year, so in the next few weeks, or if a site's off plan, we give normally monthly updates, so with images, and we add those to the sales pack. So if you've reserved a unit and you want to see the progression of the site or the unit you've reserved, there'll be information in there. If you general information, but if you want specific information on your particular unit, we can also provide that to you as well as an individual. So all of the you'll get access to all of the sales packs, and you can see the images on each development as well.
Brilliant. Thank you very, very much, Matt. As I said,
thank you so much too. Thanks for everyone for attending.
If there is any questions, feel free to message me on LinkedIn or go to your deVere advisor if you have one. I know Matt is very, very happy to do Zooms with anybody that would like further information. Matt, I've made some good property investments in the past. I'm humble enough to admit that I've made some bad ones, not through you. Here are my 3 tips for property investing. Number 1, numbers first. So typically I find with property investing, emotion comes into play. I like that area. I don't like that area. You've got to try and look at the numbers first. So speak to a property expert, speak to somebody like Matt, look at the numbers. Number 2, my tip would be choose developments with a short build time. And that's one of the reasons, Matt, we like using yourself and Intercounty Homes, because you've only got developments with a short build time. I like that. I'm more cautious when it comes to investing money, whether it's in stock markets, notes, or property, and a short build time reduces the risk. And then number 3, if you do have the opportunity to invest through a UK limited company, that could be very, very good for you from a tax point of view. And again, just speak to your deVere advisor or reach out to myself on LinkedIn, and we'll be happy to help you there as well. Unless there's any other questions, which I don't think there are, I think we've answered them as we've been going through. A huge thank you to Matt. Thank you for presenting this morning. Thank you for putting my face with my question right at the start of the Zoom. I did like that. And thank you to you guys for logging on today. I hope you found it useful. Thank you very much. Have a super day, everybody.
Take care. Thank you. Thank you all. Bye.